This is Tommy Ruke of the Motor Carriers Insurance Education Foundation and the Transportation Risk Specialist Program. If you have any questions during this presentation, type them into the chat window. They will be answered as time allows during the PowerPoint, or later we will answer them by email to you, and if appropriate, send it to everyone who participated in the program. If you experience any problems with the audio or the program, again, write it in the chat window or call our office at 800-741-484. We'll attempt to correct the problems as soon as possible. When writing your insurance, you need to consider the following. The insurer does not know the difference in insurance and coverage. They think and they say, "Here I am, cover me." At time of loss, they will remember the famous words they heard their retail agent say, "You have full coverage." And at time of need, they'll buy any coverage, whether they, if they were given an opportunity before the need to buy it. Therefore, you cannot write liability insurance without being aware of the other liability exposures and coverages the insured has, could have, or did not have. The general liability policy is the place to start, but it does not cover everything. You have questions considering claims where it's either an auto claim or general liability claim. You have some situations where you have a professional exposure. Then is that covered under the professional exposure coverage or GL? You have a situation where you have work comp coverage in play, and then is that work comp coverage, general liability coverage, or auto liability? You have employee practice liability, general liability, or work comp, and you have a bailee responsibility that could be general liability or auto. In other words, an insured or cannot write coverage in a vacuum. They must consider all exposures of insured and any additional insureds when considering the risk for underwriting and price and exposure, even if only writing one line. If you don't do this, there will be some gray areas where you, the provider of one of the coverages, gets involved in the case that should not be excluded, but since there, or should not be covered under your policy, but since there's no other coverage in place, you end up at least having to defend them under reservation rights to determine whether there's coverage or not. And there's a lot of gray area here. So when you look at any one line, you need to consider, have they got their other exposures covered, and if so, with who? When at all possible, it should be written with the same insurance carrier. That way there will never be a question of coverage. It will be a question of what loss line to be charged against, and or did we get the adequate premium for the exposure. Here's a couple coverage questions. Insured is an orange grove owner in Florida. They're harvesting fruit. They have a goat. No, a goat is not an animal at a petting zoo. A goat is farm equipment. In fact, I had a program a number of years ago where the insurance carrier, because we were insuring liability for goats and also physical damage for goats, they charged that against animal mortality. They're operating this goat in the field and they run into a fruit inspector. Is this auto or general liability? Well, the goat has to be licensed for the road, and therefore when we run into the fruit inspector with the auto, even the field, that's auto liability. The operator of the goat is picking up a bucket of fruit with the apparatus attached to the goat. This is a lifting device. While halfway up to the back of the goat, the jaws of the lifting devices comes loose, and the bucket falls on the head of the inspector. Again, is this auto liability or general liability? Here, the using of the equipment on the that's attached to the goat, which is considered an auto under the definition of the policy, is general liability exposure when they get hit with a bucket. While moving from one field to the other, this is on the highway, then that's why they have to be licensed and to operate in Florida on the highway. Therefore, they're no longer mobile equipment, they're an auto. And while they're operating the auto both in the field, in the first example, or on the highway, and they run into a car, that's a general liability. While they're using the apparatuses attached to the mobile equipment, that's now considered an auto because it has to be licensed for the road. Again, lifting the bucket with the lift attached to the goat, then that becomes GL. So there are gray areas, particularly if your insureds have cranes, harvesters, equipment, yard tractors, and those things where the coverage is gray between the two. While in the doctor's office, let's say getting their DOT physical, the driver sits in a chair in the waiting room. The chair breaks and the patient's back is hurt. Is this general liability or professional liability? Well, even though it's in the doctor's office, it's general liability. However, now when they go in the examining room, the driver again steps on the stand to get onto the examining table, and the stand breaks, causing injuries to the patient. In this case, that will be professional liability. So where there is a degree of professional liability attached, then that is typically excluded in general policy, and covered in professional liability. There's basically two types of professional liability. One that I mentioned here in the doctor's office, or a veterinarian, or things that are doing providing services to people or animals. Those things would be involved in the professional liability for them. But the ones that we deal with, insurance agents, architects, and even in the case here where your insured is a broker or makes promises like on just on delivery situations where they could have a professional liability exposure. That's where property is being damaged, or there is lack of income or lack of use of something due to making a professional decision, where the GL policy only pays for the bodily injury property damage. The professional liability pays for to have the property redone, or to pay for the loss of use or loss of income due to the lack of performance of a contract. The driver for an insured is operating an auto, has an accident. Is this auto or general liability? Well, again, it depends on what the driver is. If the driver is an employee, then it would be covered by work comp. If the driver is a, quote, independent contractor, unquote, then the auto liability policy might have to respond. Yet, if that driver is still an employee, under considerations either under the policy wording and or under the Federal Motor Carriers Act, which defines a driver to be an employee of the motor carrier whose DOT number the driver is operating on, then it would not be covered under either auto or work comp. So therefore, the understanding if the worker is an independent contractor or not becomes important in auto liability. The concern you have here is, even though there's no coverage because the, quote, independent contractor employee is considered to be an employee at the time, and you have no work comp coverage, then you have no coverage either under the auto policy or the work comp policy. Therefore, there is no coverage afforded to the insured. So therefore, any claim would not be addressed by any coverage. However, the injured worker could still sue your insured. You need to be careful about this in the classification of employee not, and also in some states or some situations, you're not required to have work comp coverage in place. But even though you are not required by state law to have work comp coverage in place, like in Florida until you have more than 4 employees, North Carolina, I think it's more than 5 employees, there's a few other exceptions like that. If that driver, if that worker gets hurt, they can still sue, and you have no coverage under your auto liability policy because they're still an employee, and again, you have no coverage under work comp because you have no work comp policy. You need to be careful. That is auto liability. There is a provision, and we've had some favorable court rulings in auto liability where this driver who's an independent contractor is considered by the court an employee because of the federal definition of an employee for operation of a commercial motor vehicle. They have the federal definition says that even though they're, quote, independent contractor, unquote, they are considered an employee for the purposes of the federal FMCSA. So if the vehicle is being operated under the auspices of the Federal Motor Carriers Safety Administration, then the courts have said, yes, the definition in the Federal Act says they're an employee, so therefore we'll adopt that definition, and the exclusion 4 in the auto policy would provide protection of the insurer, meaning that they would not have to pay. If the independent contractor is on the insurer's premises to pick up a check, to load and unload, to have their truck inspected, whatever, they step in a pothole, slip on an ice pack, get run over by a forklift, fall down the stairs, and hurts his or her knee. Is this general liability or work comp? In this case, because they're an independent contractor, it would not be work comp. However, now it will be general liability because they're no longer with the discussion above concerning auto liability, where we have been successful defending cases and saying even though they're an independent contractor, because they meet the federal definition of an employee, they are an employee for the purpose of the auto liability policy, therefore it doesn't have to respond. They're no longer operating a commercial motor vehicle. They are on the insured's premises and they get hurt. Then that would be covered under general liability, which is a major exposure if you write general liability for motor carriers who have owner-operators, independent contractors coming on their premises on a regular basis. If they do not have work comp covering all those independent contractors, covering everybody on those premises, then you might have a situation where that owner-operator gets hurt on the premises and therefore sues for their injuries, and their general liability policy will have to respond. An employee screamed at by her boss using profanity, cause an employee to fall back on the table, which hurts her. Is this work comp or employee practice liability? Here it would be work comp, not employee practice liability. But if she quits because of the hostile act by her supervisor and says the reason that I quit is because of this hostile act, I warned him about that, it makes me upset, I get hives, I do not have as good a relationship at the home, etc. In that case now it will not be general liability, it will be employee practice liability. All general liability carriers will add an exclusion of policy for employee practice liability exposure. Here's the big difference. The work comp policy, and in some cases general liability policies, pays for injuries to people or property damage. Employee practice liability pays for loss of wages, loss of income due to a hostile work environment or due to an environment which causes the person that has been injured injury because you, quote, discriminated against them or forced them to do something you don't want to do. One of the examples that we're using now in the workplace, in our discussions in the basic auto coverage, is under the new CSA, FMCSA regs and rules, where now when a driver gets stopped on the for inspection purposes, the motor carrier gets cited for those any violations found, but also the driver does. And that driver history is accessible by a potential new employer under the pre-employment screening program. So if the dispatcher or the motor carrier they work for says, look, I know that your 11 hours of driving time has been used up. However, you only got another hour to go to deliver this load. It's important to get that load to the customer today, even though you did have a problem with the weather or traffic, etc. So go ahead and drive that extra hour down the highway. And the driver says, no, I can't because I'm out of my 11 hours. And the dispatcher says, look, if you don't do it, we got to take care of the customers. To heck with those 11 hours driving time. We got to have it delivered. If you don't do it, I'll fire you. And the driver says, look, I'm not going to do it, so therefore I quit. Now, in this case, then that again falls under employee practice liability because of the adverse actions by the driver, and therefore because the dispatcher or the company they work for was asking them to violate safety regs or rules that will affect their future employment. Then they could make a suit under the EPA for those actions, and the EPL policy would have to address that. That again is why it's important that everybody in trucking, particularly under new safety regs and rules, where the driver can also be cited for any violation, and sometimes the violation could have been caused by or insisted upon by the motor carrier they're working for. That would be an employee practice liability exposure. The insured is unloading an air conditioning unit from a flatbed truck onto a roof with a motorized crane. The crane is not attached to the flatbed. It's a standalone crane, which was not hooked up. The air conditioning unit was not hooked up properly. It falls down during the lift, hitting a person on the ground and smashing the air conditioning unit. Is it damage to the person, GL or auto? In this case here, even though it was being unloaded by a truck that's auto, the unloading apparatus is not attached to the unit, so therefore it is GL. The difference here is that if it was attached to the unit, it would be auto. But since it was not attached, then exclusion 8 in the policy that says handling of property is excluded if not handled by a hand truck or a device attached to the unit. And so in this case, since it was a crane not attached to the unit, it would fall under the GL of the crane operator, and that would be GL. Again, important to know the difference between those two, because if a hand truck or hand device would be auto, where other than that would be GL. So if your insureds have flatbed operations, if your insureds auto haulers, if they have gasoline haulers, there's a gray area between loading and unloading. If flatbed operation, they might carry the forklift with them. That forklift falls off during the movement, and that is auto. But once they get to the job site, unhook the forklift and start using it, then it becomes GL. If they're unloading it by hand, like an auto gasoline hauler, then as they're unloading that fuel into the gas to the tank at the filling station, and they spill that gas as they're unloading, then that's auto liability. Once it gets in the tank, if our insured put it in the wrong tank, the damage to the tank would be auto. But now if it's used in the tank, and used, say we put gasoline in the diesel tank, and some trucker came up and put the gasoline in their diesel truck without knowing it, and the gasoline damaged the engine, then that would become GL. The damage to the item on the hook that's dropped falls down, and that is damaged, the air conditioning unit. That's not auto, that's not GL, that is in a marine, because auto policies, GL policies, have the care, custom, control exclusion. So therefore you would need an in-marine product. A cargo policy is an in-marine product. So the cargo policy we write buys back the auto liability and general liability care, custom, control exclusion. In the case that I have here, you'd probably have an installation floater or something that the crane operator would call an on-hook coverage to cover the item being damaged. Those items are needed because the person unloading it is considered a bailee. A bailee is anybody that has possession of someone else's property to do something to it, to service it. Auto dealers, service operations, to store it, warehousing, to move it, trucking, to install it, contractors or crane operators, because the auto liability policies and general liability policies have a care, custom, control exclusion. That bailee exposure of your insureds having property of others in their possession, that makes them a bailee. They must take prudent care of it or they could be legally liable for it. And when they're sued for the damage to it, the auto liability, general liability policy does not pay, again, because of the care, custom, control exclusion. So you buy an in-marine product. Our cargo policy are in-marine products that buy back that exclusion. Coverage question. When an event happens and the insured does damage to others, bodily property, and gets sued, what is their first concern? The payment of the claim or getting the suit handled, defense? I suggest to you that the first thing the insured looks for is a defense. The defense is that they hire a lawyer, the insurance company hires a lawyer to defend the insured, to prove that what they did was not their fault, they were not negligent, that it was not covered, they're not liable for it, and or to find out how much damage is done so that no more than the damage that they're liable for is paid for. One of the misunderstood things is when the insurance companies hire this lawyer to defend an insured, that lawyer is now the insured's lawyer. The only choice the insurance carrier has is to select that lawyer, but there has to be a mutual acceptance of that lawyer. For some reason, the insured does not accept that lawyer. Then there's a discussion with the insurance carrier to get a lawyer that they mutually agree upon that can defend the case. Now that lawyer is paid by the insurance company, but works for the insured. Anything they discover that might even lead to no coverage during the defense of the insured would cannot be divulged to the insurance carrier. if there's a question of coverage, a second lawyer has to be hired by the insurance company for the coverage question. So that lawyer works there. The reason I point this out, a lot of the our insureds, retail agents say, well, I can't tell a lawyer that. They're my insurance company. You absolutely can. Under the client privilege options, the lawyer that the insurance company hires works for the insured. And so therefore you need to tell the insured that's your lawyer, and you tell them everything to properly defend the case, the good, bad, and the ugly. Does insured care which policy response? We just went through a couple situations earlier in this presentation that says and shows where there's overlap of coverages, or at least gray areas between the general policies and other liability policies that you can find. No, the insured doesn't care. They don't know the difference. They don't care. If they know the difference, that's almost scary. The comment I make teaching sometime is if they know the difference, never believe them, they never had any claims, because they have been told the differences, not because of buying the policy, because they really don't know the differences, but because of having a claim and having it sorted out and learning it either the hard way or hopefully the good way because they had coverage. So, obligation of insurance provider. You cannot provide liability insurance to a business or person in a vacuum. You need to understand all their exposure, which takes time to find out about them, to have a complete operation, to check the information you can find out about them on the internet, on their website, yellow pages, things like that. Then you need to provide coverage for all exposures, or if you're not providing coverage for the exposures, point out to the insured in direct terms where you're not providing it and suggesting to them that they might need coverage. If it's basic coverage like auto liability, work comp, and general liability, then you need to be concerned with, if you're the only liability provider out there, that some of these gray areas, it might fall upon you, and you're going to have cost because you have no other liability policy in place to sort out whether you have coverage or not. And a lot of cases you end up paying because there's no one else to pay the damages. That's the advantage to having it covered by another insurance company under another line of coverage, because at least somebody there is to pay the damages, and the court systems tend not to fish or try to find gray areas to make a policy pay when really it should not be paid, just to take care of the damaged public. So that's why you have it important to make sure that those exposures are covered by somebody else, if not you. And lastly, it's our strong recommendation to provide the auto liability and general liability in particular with the same insurance carrier, so that there's not a question of coverage, it's a question of what loss line to charge it from. So provider insurers, you must be aware of all policies and how they work together. Why does an insured purchase liability coverage? They have to, because of government requirements in some cases, customer requirements, and that's the most prevailing one, or the one that they find first, because they cannot operate, they cannot pick up a load, they cannot go on someone's premises without the proper purposes. Or if they lease office space, warehouse space, parking areas, or have equipment, then those owners of the property, owner equipment, require general liability policies, and in those cases, these owners of the property and equipment would be required, will require your insurer to have a certificate of insurance proving they have coverage. So in the case here, they have to. However, also, they want to because of the bed bag lawyers. They might lose their assets. This is where you have the defense, and this is where liability policies typically are bought. But we don't want to overlook that the first use of a liability policy is not to pay a claim. Typically, the first use of liability policy is to meet someone else's requirement for coverage. And that is typically, in the case of our motor carriers, would be their customers to access terminals, loading and unloading the customers' terminals, and loading and unloading, or meet the requirements of the owners of the property, or cover our insurance for the owners of the property. So we need to understand what the customer requirements are, and we understand how we're going to meet those requirements. And in all cases that I'm aware of, both auto liability and general liability are required by customers. So therefore, another reason that you have to have auto liability and general liability. Unfortunately, when we deal with why an insured buys insurance, they look at cost, cost, cost. They look at the bottom line premium. All you'll hear them say, after all, there's no difference between insurance coverage. Insurance is insurance. That is not true. There is differences between coverage, particularly in the general liability area where there's certain exclusions and certain limitations that are possible on the policy. In the general liability area where they might need other coverages like we just went through, professional liability, auto liability, cargo coverage to cover all their exposures. So there are differences here. The policy, it says, insured, read your policy carefully. That's the introduction wording in the form. Well, do they read it carefully? Or in fact, do we even want to read it carefully? My concern is, and the things I deal with in class is, that if they read it carefully, they're going to ask us some questions, and we might not know the answer to those questions. Can the insurance industry rely on that policy requirement for them to read and understand the coverage being provided? I don't think so. I think confusion is too baffling. I think because we, the insurance industry, drafts the law, drafts the policies, any gray area will be considered not enforceable, and the court will make it. In fact, if you ask a bunch of people, and us too, do the public feel insurance is confusing and baffling? The answer to that question is, in most cases, yes. But an aside to this is, we want to keep the insureds confused and baffling. That's our advantage. That's why we're licensed. That's why we do business with this. It's up to us as providers of coverage to defuse the confusion and to take care of the areas of baffling and meet our insured's needs. So that again requires a complete description of the insurance operation, a review of all their needs, and offer coverages, or if you cannot offer coverage, spell out where there is no coverage. So in the general liability considerations, for a policy to respond, they are the following condition. The claim is against someone, entity, that qualifies as an insured. The damage done, the bodily injury property damage, is within the policy period. And the cause of the damage was not excluded in the GL coverage form, sometimes because it should never be covered, like intentional acts. Sometimes it's because there's another policy form that covers it better, like we just went through: auto liability, work comp, cargo and marine, pollution policies, professional liability policies. So those are the things that you would look at. Overview of who's insured in the policy. Again, if it's important to understand who qualifies as insured in the policy that you are providing. Losses paid by an insurance company on behalf of an insured. Insured is a defined term. The insured is a person or entity whose damage is a third party, and the insurance policy will respond and pay on their behalf, providing there is coverage. Those are the considerations you have. So the damage has to be done by someone who qualifies as an insured, and therefore those damages need to be done to another party, and when that party sues, then we will respond, either by defense to start with, and if in fact proved liable, that they would then have coverage on the policy and would pay for the claim up to the limits of the policy. So the concern you have here is identifying who is insured on the policy you're providing. That seems simple, but we don't always pay attention to that part of it. This is the first most critical thing we do in all liability policies, all insurance policies, is who should be the insured. When you start with it, it's the entity that we named on the name insured line. But we also need to understand others who are protected in the policy beyond the entity named on the debt sheet. And you can also have others being added to the policy as additional insureds. Those are the considerations you have to, because if they already qualify as an insured in the policy, you don't name them on the debt sheet. And there is differences in coverage between having someone named in the named insured line on that sheet and being added as additional insured. The policy says that we will pay for insured is legally liable. Again, that determination of legally liable is determining how the damage was done Was our insured negligent in doing those damages? And if so, if the damages, the acts that caused the damage to the public was not excluded, then we will defend them to determine if they're negligent. And in some cases, there's in some systems later we'll talk about contributory negligence or comparative negligence, where we not be responsible for the whole claim if the injured party also was negligent in their actions. But we'll determine those things, and we'll pay for those obligations under our policy. We will defend to try to make sure that the amount that we owe is proper, meaning appraisals or medical bills or things like that. So the insurance system must understand their insurance activity and relationships to the entities named on the deck sheet involved in the suits. So again, back to the need for a complete application to know all the exposures and make sure our insurers are covered for everything that's supposed to be, and our policy covers everybody that the insured wants us to or is obligated to provide coverage for. We look at the forms of businesses. A corporation is a legal entity that has incorporated their business. The advantage of the corporation is that the corporation is a legal entity and it stands on its own. The corporation can own property, they can have operations, they can do businesses. The owners of those corporations are not typically and always held liable for the actions of the corporation. Again, it depends on how they work and what they do. So that's a separate legal entity. And the personal activities of the owners are not involved or held or considered liable in the corporations. How do we know it's a corporation? Typically, you'll see the name INC. However, you do not know just because it says Ruke Transport INC that I have actually set up a corporation. One of the things that we strongly recommend you doing, either as an underwriter or agent, is go into your state web pages. Every state has it. To go into the Secretary of States and see who forms that corporation, if that corporation is still formed properly, and if the name they have given you is a proper name of the corporation and it is still active. One of the problems with it, we could start up, we could be active, but all states, and again, the reason they do this is because they want money, requires that corporation to pay and re-register sometimes every year, sometimes every 2 years, but a period of time to stay active. One of the things that we need to do when we write these policies, when we look at it, is it's an active corporation that tells us who we're insured. A partnership is two individuals who get together and decide to do business. And the key part here is if I'm two individuals getting together, I'm a partnership, but I might not be a legal partnership. To be a legal partnership, it should have its own tax ID number, and that partnership can own items in the partnership's name versus the partner's name. If I'm an individual, sometimes that's called proprietor. I am the legal entity. A legal liability company has the same basic protections as a corporation. The big difference between legal liability companies and corporations are not in the who owns the property and liability, but most of the time in taxes. There could be some others, associations or charters for banks or things like that, but you need to understand the difference in those things. One of the things that you need to know is that, again, and you can go into the Secretary of State in your state, Google or list those names and find out how they're your insurance is properly set up. Have we described the way the state knows them? Is those operations still active within the state recognition of the state? So when we deal with this, we have a couple concerns. The name insured. Item 1 of the deck of the insurance policy names the person or organization whose primary interests are covered by the policy. The key here is whose primary interest. That is the business. The thing that we need to recognize in this, though, is that it's important to list the entity, to know who the entity in the first name insured is. That's the first legal entity named on the name insured line. For example, if it's a corporation, it would be Ruke Transportation, Inc. That's the first name insured. If for some reason, and later I'm going to tell you I would never do this, but for some reason you put Ruke Transportation Inc. dash Ruke Garage Inc. dash Tommy Ruke, then the first name insured is Ruke Transportation Inc. The other two are still named insured, but they have different status in it or obligations to it. Because the first name insured, that's the first legal entity, there's certain conditions and responsibilities are placed upon the first name insured and the insurance company when dealing with the first name insured or the insured. And this is something that a lot of people don't understand, is that the obligation under the general conditions that are attached to all liability policies and also all property policies that are issued by us says that under the cancellation of the policy is to be sent only to the first named insured. This is major misunderstood. If the situation that I just showed you, where you had Ruke Transportation Inc., you had Tommy Ruke's Garage, and you had Tommy Ruke, the only person that the insurance policy obligations to send notice to is the first name insured. That's Ruke Transportation Inc. This is also later when we talk about additional insureds. Sometimes they think if they're added on the policy as an additional insured by endorsement or even on the name insured line, they will get notice of cancellation. That's absolutely not in the policies that we write, because the only entity that gets cancellation notice in the policy is the first name insured. By the same token, we have to be aware of how we set the policies up, because if and how and who we send cancellation notices to. So, because sometimes later we'll talk about where you name more than one person on the name insured line, you might send it to the business and yet you misname it, say Tommy Ruke and Tommy Ruke or Ruke Transportation Inc. But because Ruke Transportation Inc. is the business, you sent Ruke Transportation Inc. You have not properly canceled the policy. It should have been sent to Tommy Ruke. So styling of the policy becomes very important, particularly in the handling of the cancellation. We also only take policy changes from the first name insured on the deck sheet. This is also important because a lot of times you'll have someone from that business call you up and say, added this, or we just bought this location, or other things concerning in those things to add different locations, or an auto liability to add different autos. Is that person who asked those policy changes to be made the first name insured? If it's a corporation, if it's an LLC, if it's a partnership, you don't know that. We in the insurance industry do a fairly poor job to determining if the person who calls us up and says do something with the policy actually represents the first name insured. Generally, I hate banks. In fact, as I sit here today, I'm discussing or having a discussion with the bank on some paperwork that they have messed up. But the banking industry does a real good job here, because when they set up a business, a corporation, LLC, a partnership, and a banking account, they have the individual or the corporation officer that they recognize, verified by the state that they recognize the company, tell them who can act on their behalf and actually sign a document that says this person has the permission to act on behalf of the corporation, LLC, or partnership. So therefore, there's no question. We in the insurance industry do not do a good job doing that. And that might be more complicated than we need to here, but that's the concern, because later, if it's done wrong, if there's some gray area comes up, and for example, you're told to remove a location from a policy, and later you find that that person calls you up did not have the permission of the first name insured, or the first name insured has some questions about it because they needed coverage or it created additional premium involved in it, they could question those things, and then it would be up to us to prove the person who asked us to do that actually had the authority to do so and act on behalf of the first name insured. The other consideration is premium. We have an obligation to return premium and collect premium only to the first name insured, and that's the consideration that you have in those cases. If we premium finance the company, the policy, the premium finance companies gets a power of attorney from the insured. And again, we need to verify if that's our first name insured, because the premium finance company only can act on behalf of the first named insured. But the premium finance company then has authority to ask us to cancel the policy and to return the premium to them, only because our insured signed a premium finance contract that gave the finance company those rights. So again, you need to check those things out. There has been a lot of discussions where the policies got canceled, and because the proper premium was not returned to the first named insured, maybe to the agent, or in some cases, unfortunately, to the wholesale agent, who then did not get it to the insured, the courts have said, yeah, the policy says it has to be returned to the first named insured. If it's returned to any other entity, that you still, then you have to do it again. So it's a concern how we style the policies to determine who's the first named insured, because they're the entities that we have to deal with to cancel the policy, send notice to them, make any changes to the policy or premium. And again, being additional insured on a policy does not guarantee notice of cancellation based on the policy terms. So for managing the policy, we only deal with the first named insured, no other. Even if named insured or even on the named insured line, that's a concern or a consideration that we sometimes overlook. Then again, we have the three basic types. Individual. This is a person, individual. Who is the business? Typically, there will be a DBA, which is the trade name. Tommy Ruke doing business as Tommy's Trucking. The legal entity is Tommy Ruke. The DBA has no legal status, so you're insuring Tommy Ruke. The problem here is could have other businesses than trucking, a garage, a lawn maintenance company, something for their spouse that they could be the sole owner of. And there could be a gray area now, because you'll see in a second where if I'm a sole owner of another business, therefore if I'm an individual on the named insured line, a proprietor on the named insured line, you might pick up these other businesses that I'm the sole owner of. Partnership. Two individuals form a partnership. Tommy Ruke and Mike Knotts doing business as T&M Trucking. If it's formed properly, the partnership will have a tax number and will be listed in the state and registered in the state, and will have its own assets. Will operate and file taxes under the partnership's name and the tax number, and the partners get what is called a K-1 for their tax purposes. The partnership's a legal entity. Here is a major concern. There's no need to name the partners on the named insured line. In fact, it doesn't help you by naming them from both coverage standpoint and or from exposure standpoint. If it's a partnership, the partners are already, by policy wording, a named insured or an insured. You do not need to name them. If you do, then you end up with three different entities, Tommy, Mike, and M&T Trucking, a partnership, so you have three. Now you have three entities that you're providing insurance to, and not just a partnership. This is a major concern. Also, how you book it and send a cancellation notice to. Partnerships, you should only name the partnership on the named insured line. The partners are covered in the policies already because of owning the partnership. And this then limits these personal exposures and coverage. Corporation LLCs, these are the legal entities. Ownership makes no difference, meaning we don't concern about the owners. The owners are stockholders of corporation, they're members for LLCs. How they are operated, officers and directors for the corporations, managers for LLCs, are already protected under the Who's Insured provision. Again, there's no need to, nor do you list the owners or managers on the named insured line. Simply keep it the business itself. So underwriting concern. Take time to understand the names being requested to list on the policy and how they relate to the business. Do not list anyone you don't have to. Be aware of the coverage already in the policy and try not to list them on the named insured line. It only complicates things. In fact, strong recommendation, if you're asked to name more than one entity on the named insured line, you've got to underwrite each entity as if it's their own entity. Therefore, what they do and potentially generating additional premium. If you cannot get proper underwriting information concerning every entity you're asked to name on the named insured line, then don't name them there. Sometimes small, closely held corporations or partnerships don't understand who owns what. So you ask them who owns it. If the person you're dealing with says, I do, you have to ask them, I as an individual or I as a corporation or LLC. Again, as retail agents, this is kind of confusing. Suggest again to go back to the Secretary of States that you have to verify that the entities you're dealing with are truly a separate legal entity, qualified on the state and still active in the state. The worst named insured for coverage standpoint is the individual, because of the possibility of bringing some of their personal activities under the coverages you're offering. So you want to be real reluctant or real careful about the individual. You need to be aggressive, and you as a retail agent or wholesaler or insurance provider have the retail agent find out all they can for you. You want to do this in a nice way. You want to tell the insured in a nice way, and you can explain to them why you're concerned about this. And in the case of insurance, so they don't develop additional premium they're unaware of or have their policy used to cover activities that they weren't intending to be covered. Where can we as retail agents get information? Does the insured have a federal government think they are? Ask for the tax ID number. You do this if you work comp. You could have permission granted, like a DOT number. There could be a charter for the bank. Who does the government think they're doing it? Again, state sales tax, licensing for auto dealers, for operation of commercial vehicles with the public utility commissions. Insurance agents are licensed. Contractors are licensed. If it's a restaurant or bar, they could have a liquor license. And you also have in some states, unfortunately not Florida, state income tax. Overview of who's insured in the policy. Who does the government think they're doing business? Occupational licenses, permits, health department. Look in the internet. The new way, the state, organizations set up reporting to the state. That's through the Secretary of State. Officers' numbers provided by the state, as well as the officer's name. Or if it's a motor carrier and they have commercial auto, clearly we go into SAFER to find out how they're registered, what they have. You can look at other things like franchises, road and state taxes, yellow page ad, business cards, name, vehicle register, leases, and others. One of the suggestions that underwriter gave me that I did not list in here is go in and look and see, because most insurers now have yellow pages. Have web pages. Go in and see what the web page name is and see what they do. By doing these things, you not only find out who the name insured is, but they'll tell you what activities they're telling the public they're willing to perform. The time is to clear the name insured up at policy issuance, not at time of loss, where attorneys and others attempt to read everyone's mind to find out what the intentions were. You don't want to leave the gray area. You don't want that extra cost. You want to clear that up. There are others who might qualify. This will be based on the relationship to the name insured. Each liability policy has a who's insured provision. This will spell out who those automatic insureds are. If they're already an insured, meet the definition, you don't need to add them on the deck sheet. Again, you complicate it. Mainly those things are the owners of the legal entities or the managers and stockholders, directors of the legal entity. In the general liability policy, activities are limited to the conduct of your business except for proprietors. The same limitation is not found in the auto liability form. So the general liability form has less exposure to bleed over into the individual lives, exposures of the owner of a business. That's not true in the auto form. Adding an insured. Why? It makes sense. It meets the obligations of customers. It could be required in a lease. It's the right thing to do. But by adding the additional insured, you need to know two things. The only thing we're going to protect them for is when they're held vicariously liable for the actions of the insured, not for their own negligence. And second, anybody you add as additional insured, the policy does not require us to send notice of cancellation. Those are two things that are totally misunderstood by the people who are asking to be added as additional insured, or in some cases even our insureds. They do have coverage when they're named in the suit. Anybody we add as additional insured, when they're named in the suit because of the activities of our insured, or in some cases because they own the property and they're held liable because they own the property, but again, only from the activities of our insured and then being held vicariously liable for the activities of our insured. The second thing is they do not get notice of cancellation. The only people we send notice of cancellation to, the only entity we send notice of cancellation to is the first named insured. You might not want to add someone because you might pick up liability that you do not know about or have not charged for. That's again, why are you needing to name them? If you're asked to name them and you're asked to name them to pick up their liability, meaning name them on the named insured line, then you need to underwrite it to make sure you're not picking up additional exposures than the business and you've got the proper charge for it. And from the retail agent standpoint, that you might also have a premium obligation. The general liability policy, who's insured? The insured structure determined by the policy lead-in wording, Section 2 is an insured, and then additional endorsements that we might add. The policy leading wording says, throughout the policy, the words you and you refer to the named insured shown in the declaration. Notice here it's not the first name insured, but it's any name insured on the declaration piece. And any other personal organization qualify as insured in the who's insured department. So that's why it's important to make sure that the person on the deck sheet, that's the you, is set up properly, and we understand those, and then who else qualifies. The word insured means any personal organization qualifying in the who's insured section. So let's look at who's insured section. If you're designated insured as an individual, you and your spouses are insured, so you don't need to list the spouses. This is Tommy Ruke doing business as Tommy's Trucking. I am an insured, and if I had a spouse, I no longer have had them. I've had a couple. Now, they're all friends of mine, but we don't worry about them now. But only respect to the conduct, and here's the key problem, of a business of which you are the sole owner. Notice it doesn't say the business, it says a business. So if Tommy Ruke Trucking also owned Tommy Ruke's Garage, then you're picking up not only exposure, because remember, the legal entity is Tommy Ruke, not the DBA. So you're picking up exposure for not only Tommy Ruke, but trucking that you think you're riding, but also the garage business, because I am the owner of both. This again you need to, we talk about later, to find out who, if I owned anything. That's not the case of any other entity. This is why I said the individual is the worst insured, because it doesn't limit it. Notice under B, a partnership or joint venture. You're an insured. Your members, your partners, and their spouses are also insured. But notice here, but only for respect to the conduct of your business. That's the partnership. So two things here. First off, you name the partnership. You don't need to name the partners. You don't need to name the owners. You don't need to name their spouses. They're already covered for owning the partnership and operating the partnership. But that coverage for the partnership is limited to the conduct of the business, meaning that you're not picking up any other business they might be the sole owner of, just their liability for owning the partnership. C, a limited liability company. Again, you are an insured. That's the legal liability company. Your members who own it are also insured. They only respect the conduct of the business, the limited liability company. Your managers are insured. Those are the people who operate it, but again, only respect to their duties as their managers. So we're providing coverage for the owners of the LLC, the manager of the LLC. You don't need to worry about adding them to the deck sheet. They're already protected, but only for the conduct of the business. Any other organization other than the partnership, joint ventures, LLC, that's the corporation. You are an insured, meaning the corporation. Your executive officers, that's who operates it. Your directors are insured, that's who operates it, but only respect, again, to the duties of officers and directors. Your stockholder, that's who owns it, are also insured, but only respect to the liability of the stockholders. So, and lastly, a trust, you're an insured. Your trustees are also insured, but only respect to their duties as a trust. So when we're reading this, we got to be aware first the individual. The individual is the insured, their spouse is insured, and you're covering them for any business that they're the sole owner of. Partnerships, LLCs, corporations, joint ventures, they're the insured, but you don't have to worry about naming the owners and the managers of those businesses on the deck sheet. They're already covered, so don't do that. If you do that, now you got the worst insured individual coupled with an insured that has more definitive exposure, and that's the business itself, the partnership. And notice any coverage we extend beyond the business, beyond the partnership, I mean the LLC, corporation, to the individual owners or managers, we're not going to cover any personal activities. It's just their activities and their duties of the insured, again, the partnership, LLC, or corporation. You need to understand this as it's set up. Then we go also extend coverage to your volunteer workers or any other performing duties related to your conduct of business, or your employees, other than either your executive officers, which are the people we mentioned above. So here we're extending coverage to the employees. And but notice it's related to the conduct of your business. However, none of these employees are insured for bodily property damage advertising to you, meaning that business, to your partners or members in the LLCs or co-employees. This is where you have the employee exclusion. This is where one employee cannot sue the other employee. We don't cover that. We cover that by work comp, and work comp statutes provide coverage or limitations in that. So therefore, the fellow employee suits will not be covered. However, if the employee sues the corporate officer personally because they made the decision, or the board of directors, we do cover that in GL because they're not excluded here. The people that I say in item 1, this exclusion doesn't apply to. They only apply to the people listed here. And the exception says clearly other than the entity executive officers above. So that's key consideration when you look at exclusion in the policy for fellow employee exclusions. We also do not cover to spouses and children from which they're obligated to share damage and repay someone else, those things there. But the consideration is officers, directors, corporations are covered on their own. Employees are covered as long as they're within the scope of duties. Fellow employee suits, if it's for an employee who is not an officer or a director, we would not cover that suit. However, if they sue the officer and directors for putting them in an unsafe area, then we will cover that suit from the employees if the work comp laws of the state do not prohibit us from doing that, or does not provide tort immunity from doing that. Major consideration here for fellow employee suits. We don't pay for property damage also. Any other person volunteer while acting on as a real estate agent or anybody else with temporary custody policy because of a legal representative to dying. And lastly, we give automatic coverages for new organizations within 90 days after they're organized. But again, it would be organizations that are owned by the same entity or same ownership or joint ventures of the ones that we're covering here. No other person or organizations with respect to conduct of your current or past business will be covered. So if you have a partnership and turn into a corporation, if you're a proprietor and turn now into a corporation partnership, you got to make sure those other legal entities are still covered by retaining those names on the policy that you're writing now, and or putting a discontinued operation policy in place to cover those other entities that are not listed here. If the insured is a partnership, they will be, it could be possible exposure for coverage from businesses the individual owns beyond the DBA, a proprietorship by VA. You could, to limit that, you could put a classification limitation on the policy. When we deal with trucking, that's what we do often. We put a classification limitation only covering the trucking exposure, no other. You need to ask the applicant, do you own any other businesses? You must find out not only the business that you are insuring, but also if the proprietor owns other businesses. Do not forget the spouse taking care of a few kids for daycare. They get paid for it, so that's a business. You need to address those. You do not need to list the owners, members, stockholders, managers, officers, directors on the name insured line. They already are protected for partners, LLCs, corporations. If named, then you possibly have added personal exposures to the coverage, again going back to the sole owner. You do not need to name the partners of a partnership in the name insured line. They're already covered. The best insured is a corporation or LLC because that's the legal entity standing on its own. We do motor carriers. Why do motor carriers need insured? This program is provided by the Motor Carriers Insurance Education Foundation, so the focus is on insuring motor carriers. I'm often asked, why do motor carriers need GL? This is a typical question for smaller truckers. Those that do not have to meet leases or shipping requirements might not have GL. A list of why their need follows. The next sessions that we talk to, starting with section 2, will address these needs. So if your insured uses mobile equipment, meaning cranes, forklifts, and front-end loaders, once the insured delivers the cargo, stacks the product, deliver the product, and that deliver the gasoline, and the gasoline's used, or the stack of the product falls down there. Auto-related damages caused by autos not owned or operated by an insured. This is vicarious liability for having operators on their behalf. If you have contractual exposures, most of the contracts we sign hold the customer harmless not only for auto liability but for general liability. Personal injuries. Protection of property exposures from being damaged or stolen. That is the protection of property provision that's there if the intentional acts have an exception to that. And sometimes the hiring exposures, and that's response to previous employers, previous employees' past history with you. All those are GL exposures that you find unique to motor carriers or why motor carriers. So if a customer or other insured on premises for business purposes, even if it's a home, small motor carriers, there's no coverage in homeowners. Same thing with salesperson. Loading and unloading with a device not attached to the trailer, forklift, front-end loader, crane. Erroneous delivery of products, damaging the tank you put it in, and or when it's being used for purposes not there. Again, that's a problem. Libel, slander. Clearly, our insurers do not say that will libel or slander somebody with their words. Or now with texting and emailing and all that, we might say derogatory things that could be held liable for that. The motor carrier repairs vehicles. We're going to or sells parts. We're going to tell you later the general liability policy covers everything a garage does, except test drive a vehicle or operate a vehicle. So therefore, no one needs a garage liability policy and a general liability policy. If they use, again, self-defense, even dog bites causing injuries to others trying to protect personal property, those are the concerns you have. Furnishing a liquor, host liquor, safety part, I put here safety meeting, that's humorous, drivers, those things. Contractual obligations fall over both general liability and auto. Insured driver rents a hotel room on your behalf, goes to sleep because they have to do the sleep the 10 hours after working 11 or 14 or the 64 hours. They burn down the building. This could cause a problem. The motor carrier needs a certificate of insurance to their customers to load and all and to meet the customer's requirements. Lastly, failure to disclose drug for previous employees. This is the check during the requirements of CDLs of the previous employer about the activities of the employee you're about to have. The insured sued because of someone's auto accident. This is vicarious liability. Insured owns or uses mobile equipment, forklifts, front-end loaders. And last of all, as a retail agent, you need to worry about your E&O exposures. We're going in depth of all these things in our future sessions. We hope this webinar is informative for you. This is the starting of the JL webinar. Again, there'll be 3 other sessions later. We encourage you to take those 3. If you have any questions, contact us at trs@ibci.net or call us at 800-741-4084. Have a good day. Thank you for your attention. I'm out of here.